Hi everybody. In this video, we'll use the reconciling information we identified in the previous lecture to prepare a bank reconciliation for Chavez Company as of September 30th. This video is a continuation of the bank reconciliation exercise we began in video lecture 9.5. We'll use the same worksheet started in that lecture. Turn to the first page of the worksheets showing the September details from Chavez Company's accounting records and from the company's September 30th bank statement. In the previous lecture, we identified the following reconciling items: 1 deposit in transit, 2 outstanding checks, an NSF check in the amount of $118, and a bank fee in the amount of $15. We also identified the September 30th balance per bank's $18,531.65 and the September 30th balance per books $17,888.30. So we are ready to complete our bank reconciliation for Chavez Company. There are a variety of formats in which a bank reconciliation can be presented. For this exercise, I will use the format shown in figure 9.16 on page 298 of your textbook. Let's begin. Turn to page 2 of the worksheets and enter the balance per bank, $18,531.65. Remember that we need to adjust the bank balance by any timing differences for items properly recorded on our books but not yet posted on the bank. Deposits in transit will increase the balance per bank, and outstanding checks will decrease the balance per bank. So let's add the 1 deposit in transit of $1,682.75 and then get a subtotal. Additions: deposit in transit, September 30th, $1,682.75 for a calculated subtotal of $20,214.40. Now let's deduct the 2 outstanding checks, number 593 and 594, and calculate an adjusted bank balance. Deductions for outstanding check, number 593, $399.10, and number 594, $2,060, calculates an adjusted bank balance of $17,755.30. Next, record the balance per books, $17,888.30. Then adjust the book balance by any amounts the bank added to our account or took away from our account that have not yet been recorded on the books. In this exercise, there were no bank-generated additions to the account. However, there were 2 amounts recorded on the bank statement that reduced our cash balance that were not yet recorded on the books. The NSF check in the amount of $118 originally received from customer S. Nielsen in payment of her account balance, and the September 30th bank fee in the amount of $15. Let's show these amounts as deductions from the book balance and calculate an adjusted book balance. Deductions: NSF check from S. Nielsen, $118, bank fee, $15, leaves an adjusted book balance of $17,755.30. The adjusted book balance now agrees with the adjusted bank balance, so our bank reconciliation is complete. However, we're not finished yet. The general ledger shows a cash balance of $17,888.30 as of September 30th. This balance is not correct, so we need to make a journal entry to adjust the cash balance. The NSF check was originally received from our customer S. Nielsen in payment of her account. At the time we originally received her check, we debited cash and credited accounts receivable, leaving a zero balance on her account. However, her check bounced, so we're going to have to reinstate her accounts receivable. We will also need to record the expense for the September 30th bank fee. Therefore, the adjusting journal entry we need to make is a debit to bank fee expense of $15, a debit to accounts receivable of $118, and a credit to cash for $133. Let's make that entry. September 30th, bank fee expense, debit $15, accounts receivable, debit $118, cash credit $133, description to record the September bank fee and the NSF check, customer S. Nielsen. And finally, let's post this accounts receivable debit to S. Nielsen's customer card in the accounts receivable subsidiary ledger. Date, September 30th, NSF check, General Journal, page 11, debit $118, leaving a balance on S. Nielsen's account of $118. Then return to the General Journal and record a check mark in the posting reference next to the $118 debit to accounts receivable. Well, that's all, folks. See you next time.